The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. Now, Larry Pesavento.
Okay, looking good, Billy Ray. Feeling good, Lewis. We're going to take a look at the German DAX. As you can see, it's completing a beautiful ABCD pattern. Very, very distinct. And, of course, we know these don't work all the time, but when they do, they work relatively well. It started to work this morning. Whether it's going to continue or not, you know, we'll have to wait and see. Our next little trip is we're going to go across the channel over here to the UK and look at the FTSE. Again, you're seeing an ABCD pattern here since early January. You saw the beautiful Gartley we had down there at 67.40. We rallied 477 ticks to the upside, and that should be completing as we speak sometime either today or maybe tomorrow. The next one, since we're over that way, we'll just take a look at the German bond. This is the one that we're watching very closely because it's about our interest rates also, because we live in a global world. And if we take a look at this German bond, you'll see the butterfly pattern that we made up there. Remember that number, 165.88. That was the 78% retracement on the long-term weekly Gartley, bearish Gartley pattern. Fact is, I'll bring this up here so you folks can remember it because it looks like it's correct. Now, if we get above 166, I assume this probably would be a failure. But right now, it's acting pretty much like what we would expect it to act like, but we'll have to wait and see. We've got some inside information, boys and girls. Stay tuned. We have some information from our good friend Rich Anderson and also Cy Monley that something big is happening in the wheat market. Now, we don't know what it is, but we know one thing. If prices are going higher, there's more buyers. And if prices are going lower, there's more selling. So what we're going to do is we're going to take a look at the wheat market. I'm going to do it two different ways. First of all, we're going to look at the March wheat right here, bring it up to see that you're looking at this ABCD pattern that's been in a really tight trading range for quite some time. We've got an ABCD structure just a little bit higher up in here, but that's not where the real key lies, and I'll show you in just a minute. But let's look at this chart for just a second. You'll notice the 10-day cycle that we had on the bottom there. That's nothing more than, you know, part of that lunar cycle that we look at. That's a 135 pattern. You can see that the higher bottoms, they're coming in right at 61% retracement each time. The ABCD structures are almost perfect. So that tells us that we're getting ready to probably, since we've been up 8 days, we're probably getting ready to, move to the downside. But that's not where the inside information is. And it's not really inside. It's available to everybody if you know how to read it. And this is what the chart is that we got from our good friend Rich Anderson this morning. And of course, he and Cy and I, we talk quite a bit. But there's something going on with buying in wheat. Let me show you why. Here's what they're showing. This is showing the relationship between the nearby wheat and the far out wheat. In other words, this is a relationship between March and May. They're buying March more than they are buying May. So that tells us wheat is breaking out on a cash basis. And it's breaking out over the December highs substantially, as you can see. This means, folks, that people are wanting, the exporters need wheat right now. And that means that they're buying it to fill these orders. Now, if this is the first start of this could be really substantial. It might mean something about this Chinese brouhaha that they got going. I don't know. But that's the fact that we've got these things moving in the right direction. So that's the key to look at. Now, the grains have always looked relatively good ever since this Chinese stuff started. But as we get moving far along here, these next couple of weeks and months, we're going to see I believe we're going to see a really big move this year if we have any tiny bit of weather problems. Speaking of weather, you're not going to believe this, folks. We were 72 yesterday. Tucson is going to be 28 degrees tonight. That's 3 degrees below freezing. In February, that is a very, very low temperature. It's not going to be a record, but it's going to be close to being a record. We're in the middle of a light rainstorm these last 3 days. That's going to stop, but it's going to get really cold tonight. So very, very unusual weather. Whether it's continued to the growing season, if it gets that way, we won't know, but we're going to watch it anyway just to pay close attention to it. I've got a whole section here that I want to cover on technical analysis here a little bit, but I wanted to get into one of the other markets that we're watching really closely, and that is the gold market. If you'll take a look here, this is the XAU. Now, you'll notice that gold has been dropping the last several days. Yeah, but you're in Oregon or Washington. You're supposed to be cold up there, Bubba. You're up near those mountains, near those Wasatch Mountains. All right, here's you can see here that the XAU is actually looking much stronger than gold. That's highly unusual. I think part of that is the fact that the stocks have been so strong that it's put the, they're buying everything. And so that's probably why that's, I don't know. It's just an anomaly of, what's going on to see that 25, that is cold for you. Wow. Holy cow. That is really, of course, Peter up in Park City, Utah, that always cold up in that area. Okay, let's take a look at that XAU, because that's really interesting of what we're watching here, because it's very, very important. One of the other things that we've been sort of keeping a very close eye on is this crude oil. If you remember, we made that 382 retracement in crude oil on Sunday night. There's snow in Seattle. Gee whiz, what's happening to our country? Uh-oh, I know whose fault that is. I'm going to call Washington today. If you'll take a look here, crude oil made that 382 retracement up there at that 55.71, and we've already broken, we got almost down $3 a barrel this morning, and it is very, very close to seeing if it's going to have some type of a bottom in this area, but it looks bearish right now in the crude oil. We're seeing the same thing in the gasoline, and so all of those are telling us that we're, really, really close. We also, remember, we were looking at cocoa the other day, and it's continued. I believe this is the third day up in the cocoa. And if you bought that, put your stop at break even, which would be around 21.80, and let it rip. It might work, might not. But the same thing with the June hogs that we looked at. That's another one that looks really interesting. And we would have your stop at, I believe, 75 in the June hogs. You wouldn't want them to get any lower than that, because they've had a pretty good move off of that 61% retracement that Ruby told us about the other day, which I believe was Monday. So we want to pay close attention to those as we watch these unfold. Now, the stock market, we're still rocking and rolling to the upside. Folks, we have to take our hat off to one of our guests. He's always one of the timers for Timer Digest. That's Tim Bost over in Sarasota, Florida, and we have to look at this because I keep these things when they make the predictions, and you'll notice here that we've got a high to somewhere in early February, and where are we today? Oh, this is early February. So pay attention to this, because if he's correct, you're looking at about a 2-month move to the downside all during March and April, bottoming around, April 7th or 8th, it looks like. May or may not happen, but the pattern is certainly lining up that way. We'll have to wait and see. 877-927-6648.
The TAS Profile Scanner is the most revolutionary piece of trading software that you will ever try. Wouldn't you like to approach the markets with confidence? As you begin your trading day, it's likely that you'll be faced with lots of decisions. In order to make the best decision, the first thing you'll need is a strategy that will help you minimize your risks. Whether we're in a bull or bear market, a good strategy is to have the tools needed to help you scan and analyze the markets before you trade. The TAS Profile Scanner instantly scans and filters over 2,500 global financial markets, such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, president of TAS Market Profile, the TAS Profile Scanner understands that in today's technological world, the use of top-flight software applications, automated trading algorithms, and technical analysis expertise is essential to successful trading in today's market. Whether you're looking at the trade matrix, the ETF heat grid, the market breadth, the landscape charts, or the many other features of the TAS Profile Scanner, this is a piece of software that will revolutionize how you look at the markets and set up your trades. The team at TAS has even put together a 12-part video series to walk you through every aspect of the TAS Profile Scanner, which you can find directly on the TAS order page at TFNN.com. Sign up now for only $97 a month with a risk-free 30-day trial, so you have nothing to lose and everything to gain. See for yourself how you can harness the full power of the TAS Profile Scanner by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services section. Remember, with a 30-day money-back guarantee, you have nothing to lose. Don't let another day pass you by without trying out this amazing piece of software that will revolutionize how you look at the market and how you place trades. Sign up today.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Okay, folks, posted the chart that we were looking at last night. You'll notice it's the euro on the 4-hour chart. And on the right, you'll see the hourly chart for the Canadian dollar. These were two patterns completing at the same time, different cross rates, of course, and they both actually work. The Canadian dollar one is down about 35 pips. The euro is only up about 10 pips, but they did start to work. Now, when you're looking at shorter time frames like this, you know, you have to factor that in, and you don't want to risk a whole lot. Those are the kind of trades that you only want to risk maybe 30 pips, you know, at the very most. But that's what we're looking at. Now, we have another one that we really want to look at. This is going to be real interesting here because even though I'm not a betting man, we have one of our subscribers from Hong Kong who swears that this chart is going to fail. Now, we haven't been open in Hong Kong for 4 days because of the lunar Chinese New Year started on the 5th, and so they've been closed. It closed at 27,930, and he says it's going to gap up 500 points. And I said, if it does, I will take my hat off and salute them. But this is a completed pattern, folks, that we had at 28,172. It opened there and then was down 250 points from that level. And then it hasn't been open now for 4 days, so we don't know it'll be open tonight. So we're going to follow through with this to see if it works. The reason why I'm bringing this to your attention is when you're doing technical analysis like this, you disregard what the news is and just follow what the chart patterns are telling you. If the prices are going higher, there's more buying. If prices are going lower, there's more selling. This is what we're seeing in the wheat market. We're seeing more buyer in the March wheat than we are in the May wheat. And the reason why is the exporters need the wheat now. Someone's put an order in and they need it, and the farmers are making them bid it up. So that's what we're watching when you're looking at these things. So we're going to follow this one just for educational purposes. Maybe it'll add a little bit of confidence to your pattern recognition, and because I know sometimes, the news is most bearish at the bottom and most bullish at the top like it's supposed to be, but that's neither here nor there. Now, we're going to take a little trip down technical analysis lane here, and we're just going to take a look at some classic patterns here. We're going to look at reversal patterns first. And then what I'm going to do is I'm going to show you the difference between these classical patterns that we see versus the ones that we look when we're watching in these harmonic patterns. And we'll cover that in just a minute. But you'll notice here, you see the double top pattern. You see the head and shoulders pattern. You see what they call a rising wedge. Or a pennant or a flag. You see the expanding triangle. I don't really believe this pattern is an expanding triangle. And then, of course, you see the triple top. This triple top is the one we had in the U.S. dollar index at 97.72. We pointed that out to you, and also the fact that it was the exact 61% retracement on the weekly chart. That's why, they're so important. But these patterns do work. There's no question about that. The $64 question is that you want to be able to find the ones that really make your life a whole lot easier. Now, those were reversal patterns, and if we look at the next ones that they talk about, which are continuation patterns, you'll be able to see them here. You'll see they have the symmetrical triangle, and if you look at that symmetrical triangle on the left, and if you follow what we look at here, we know that is Roy Longstreet's 135 pattern. You can see the three higher bottoms. You go right below that, symmetrical on the downside, 135 pattern on the downside. And then if you look at this rising wedge, you see it breaking out of a triple top. That's a very, very good pattern. And you'll see breaking out of a triple bottom on a rising triangle to the downside. And then you have the bullish flags where you have the ABCD pattern. Now, the one on the far right, in the upper right, if that comes in right at the 382, like we did here remember in December, we had that big sell-off in stocks, and then early January, around January 8th, we made that pattern right there. That was right at a 382 pattern, and away it went. And on the downside, this is what we just saw in the Canadian dollar last night, an ABCD pattern in a downtrend. So that's what we're watching as we look at some of these. Now, as we look at some of these others, what we're going to see here is I'm going to put some of the other patterns that they have in, and I'm just going to sort of bring them together. I'll put them all together here. You'll see them to help you a little bit, but this is how I got started doing this, was looking at these old patterns from Wyckoff and Gartley and all these other places, and I try to put them in a context to be able to use them, for trading purposes. And the only way I was able to do that was to put a number sequence with them. In other words, to measure the swings by using the numbers of sacred geometry, of which the Fibonacci summation sequence is part of that. And that led to what is now known as the harmonic patterns, or the Gartleys, or butterflies, whatever you want to call them. But, that's basically what you're looking at here. So I'm going to show you those, and then you'll be able to see where I'm coming from as far as putting numbers to these levels. And believe me, these things fail all the time, but they work all the time too. The problem is you don't know which ones are going to work and which ones are going to fail. I know the answer to that, but I'm not able to tell you. I don't know the answer to that. Nobody else does either. That's the whole reason for speculation, is nobody knows what's going to happen next. Folks, in the risk-reward equation, you only know one thing for sure, and that is the risk. You don't know what the reward is, but you can control your risk. Your reward may be 1 to 2, it may be 1 to 10, it may be 1 to 50, it may be break even. We don't know, but that's basically it. But you'll notice here that you have 6 bullish patterns and you have 6 bearish patterns. There's some others in here, but these are the ones that we look at most regularly, and we see them all the time, and you will see them all the time because the market can only do 3 things. It can go up, it can go down, and it can go sideways. So if you study these patterns and add these ratios from the sacred geometry number sequence, you're going to be, far better off. But again, they don't work all the time. That's the that's the bottom line. We see that quite a bit. Oh, David White has just posted one of my favorite quotes from Confucius. Our greatest glory is not in never failing, but in rising every time we fall. That's very good. And I think Mr. Churchill had one very, very similar to that. My favorite quote by Churchill was his address to Westminster in 1939 at the inauguration, or not inauguration, but as they were graduating. He walked up on the stage. This is in the midst of being hounded by the German Army and Air Force and stuff. And he walked up on the stage and he said, "Never, never, never give up," and he walked off. And that was one of his most famous quotes. We have a picture in the family of the two little boys, Avery and Mitchell, sitting on a park bench in Philadelphia. And right on that park bench, one little boy's on the left, the other little boy's on the right. In the middle of the park bench is that quote by Churchill: "Never, never, never give up." And I don't even think they knew that was my favorite quote when they were sitting there. But every time I walk past that portrait, I smile and think of old Winston himself, because he was a crotchety old ever. One of the favorite quotes was he was at a party one night, and this lady was really ragging on him, saying something like, "Oh, you're nothing but an absolute drunk that happens to be in politics." And he said, "Ma'am," he said, "you are correct. I am totally smashed and totally drunk. But when I wake up in the morning, I will not be drunk anymore, but I'll have a hangover. But you, young lady, when you wake up, you're still going to be ugly." Anyway, we'll take a break here. 877-927-6648.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service, Fibonacci 24/7, is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, but we're back, folks, and one of our listeners is asked to highlight that triple top pattern that we were just talking about. This is the one in the, oh shucks, I got to do the IBM again. I'll do this dollar index first. You'll notice that triple top that was up there at that 97 and change level. That was the 61% retracement on the weekly chart. We're now above the 96.25 level. We're getting ready to complete this pattern here, pretty close to 96.90. We want to watch this one really closely, because if we get that, that means if we get above that triple top up there, folks, that is really going to be big news. That means the euro will be going below the 112 level, will be my opinion, but we'll see if that's going to be the case. Now, before I did that dollar index, I posted the chart for IBM, and the reason why I posted it is I want you to notice that over the past, how many trading days has it been now? It's been the last 7 or 8 trading days. You know, the stock market is basically the Dow Jones, of which the IBM happens to be a component. And it's a, price weighted, so it's weighted pretty good, and yet it hasn't broken above that 61% retracement. Now, maybe it'll do that today, but it hasn't done it as of yet. So it is slightly weaker than a market stock. Now, many of these stocks have gone up quite a bit. If you'll notice, I believe the NASDAQ stocks have been up about 20%, as I recall, or maybe it's the Russell that has been up 20%. Since we bottomed there on December the 26th. But there's been one heck of a rally, very little pullback. You know, we've had one pullback in the S&P that was around 60 handles, but that was really all there was. Not much else, other than that. But it was a key one to watch as we see that unfolding. I wanted to, let's get this up here one more time. Bear with me here, folks. I wanted to bring this euro up since we were talking about it. Let's just take a look here at the euro so you can see where we are now. We're trading at, we're down at that 113.85 level now, folks. You'll notice if we get below 112, what we're looking at is not very good. And the 61% retracement is at 113, and we're trading at 113.85 now. So if we get below 113, and if we get below 113, you're going to be looking at something really, really sinister in the euro, i.e. bullish the U.S. dollar index, which would not be too good for the gold market. But right now the gold is holding its own, hasn't really decided which direction it wants to go. It's very close to several different areas of support down there at the 310 level, and right below that we have another one at the 1301 level. So both of those are lined up, relatively well. We have a question from one of our listeners about the spread in the wheat. Basically, that chart that you're looking at, folks, let me just, because I know a lot of you folks are not commodity people, and I just wanted to try to explain it a little bit better. The chart that you're looking at here, it comes from Rich Anderson and Zyme Only. You'll be able to see here what this is. This is the relationship between the March and the May wheat. In other words, they're buying more March than they are buying May. So that means that March is rising because they want the nearby wheat to be delivered. And that's the theory behind it. And when that spread starts to work like that, professionals in the business begin to realize that maybe demand is coming into some of these markets. And we've been saying that for quite some time because we've been down at major support in corn, beans, soybean oil, and soybean meal. We had a big move for the 24/7 folks, and the soybean oil move. It moved better than almost $900 straight up. Got out of it a little too soon, but it still was a really good trade because it was at a very low level and had a really nice run. So those are the kind that we try to find, but like they fail sometimes. That's basically the bottom line of what you're watching here. So that's about it. Let me take one look here at the question from one of our listeners, and that is about something that happened yesterday. This was one of the ones that we had from 2 weeks ago when we shorted the British pound up there at that 132 and change. We got down to our first objective, which was at 130. We actually went below that very quickly. We got all the way down to 129.45. We've held that now for 2 days. That's the 50% retracement of that move, and it's also a 382 retracement of the low from January, so early January. So that's another one to pay attention to here at the 129.40 level in the British pound. This has potential for legs, folks, because of that bottom down there is the 78% retracement on the long-term, weekly chart. That was at 124.75. The low was 124.65, and we immediately rallied, 800 handles, 750 handles. So that's a big move in the British pound, and that might just be the start of it. This could all be related to what's happening to the dollar. So we have to watch each of these cross rates separately because they're acting differently. Just look at the one the one that we've been most bearish on, of course, has been this Canadian dollar. And that you'll notice that we just completed that ABCD on the Canadian dollar last night at the 132 level. And now we're trading at 131.70, and so this still looks like we're heading down to the 128, 129 area is what it looks like in that Canadian dollar. I mean, it's just an ABCD pattern, but whether it fails or not, we'll have to wait and see. I haven't checked the price of gold yet, but let me double check that for us because I believe we're just in this really tight trading range, and we're going to see if that's going to be the case. Now, we made a new high. Looks like we did in the NASDAQ. We didn't quite do that in the S&P yet, but it's still early, and because the flag just went up in the amateur hour, so we'll see what's happening. The gold is doing nothing. It's trading at that 1374 level. Let's just bring this up so you can take a look. We're in between these really tight ranges here. I really, I have to say that you have to take a guess here, folks, whether you think gold is going to go higher or lower. My guess is either it'll be higher or lower. That's all I'm looking at. Let's take a look at this gold chart. You'll see you're right in between these two levels, 1324 on the upside, and way down there is that 1301 number that we're looking at, but there should be some support at 1313. That's only $4 away, but going below that would really, kick it in gear, to put it to the downside. So we'll see if that's going to be the case or not. The early morning calls on the stocks were stronger because of the positive response that they got for the State of the Union message. 72% of people reported by CBS thought that he did a great job. Personally, I thought he did a pretty good job myself. And I'm not too much into politics, but I thought he did a pretty good job explaining where we were and how we got here and where we might be going. But God only knows, and she doesn't tell us until it's all over. All right, one other factor that someone is asking about, the 113.50 is that's in April gold? That's not right. No, I just saw April gold at 13.17, Marshall. Will you double check that for me? I think that's February gold you're looking at, my friend. Double check it because because I'm on the air right now. I don't get those prices till right. Yeah, it's Feb gold. Okay, thank you, Marshall. Thank you very much. And also thanks for letting us know that there's snow on the Oregon beaches, if you can believe that. Where you talk about global warming. Hello? I don't think so. 877-927-6648.
Hi, folks. This is Tom O'Brien. If you'd like to be the bank and get the type of interest they receive instead of the low interest rates they give to clients, then I have an investment you may want to take a look at. I'm offering 4-year secured first mortgages on buildable city lots in St. Petersburg, Florida. The investment can be anywhere from $30,000 to $75,000 per buildable city lot. The interest paid is 7% per year, paid monthly. Depending on the investment, the income per month per lot ranged from $175 for a $30,000 investment to $437.50 for a $75,000 investment. If you are in the CD market, you want to look at this investment. St. Petersburg is located in Pinellas County, which is the densest county in Florida. If you're looking for an investment with your principal intact that pays a good interest rate, this may be for you. The supply is limited, so act now. For more information on these secured first mortgage opportunities, you can call me at 877-518-9190. That's 877-518-9190.
No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters. Will the S&P 500 continue to climb? For bold trades on U.S. large-cap stocks in either direction, trade SPXL, SPUU, or SPXS. Directions Daily S&P 500 Bull and Bear Leveraged ETFs. Direction Leveraged ETFs. An investor should carefully consider a fund's investment objective, risks, charges, and expenses before investing. A fund's prospectus and summary prospectus contain this and other information about Direction shares. To obtain a fund's prospectus and summary prospectus, call 866-476-7523 or visit directioninvestments.com. A fund's prospectus and summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
The Bull Bear Binary Option Hour. Next on TFNN.
Okay, we're back, folks. We're going to show the cotton chart for Ruby here because we're at a pretty interesting bottoming area. As you notice, we're having a little bit of a sell-off here these last few days. Ruby, we're trading at 73.40. Watch 7,200. $72 a pound in cotton. That's a 61% retracement. We've got that big ABCD down. We didn't rally very much. We only rallied up to the 382 level, which is sort of bearish. But if we can hold between 72 and 71, it's got a chance for a pretty good move. You can see all the different ratios and all the different patterns that, you know, we talk about in the cotton market, the multiple ABCD patterns everywhere, and the different ratios that we're watching. Now, boys and girls, we have a special request, so bear with me now. The little princess in the room, Dudette, wants to see Tim Boss' picture of what he thought the market was going to do. Tim is from Sarasota, Florida, Financial Cycles Weekly. And as you can see here, here is his astro cycle projections. We got this 5.5 weeks ago, folks, when he was on last. He was on last week, too. And it looks like in early February, he sees the rolling action with the market starting down between 0.5 and 0.6. This is the same thing we're seeing when we look at the patterns. Now, they went a little bit higher than we thought they were going to go, but not that much higher. You know, they're just a shade. And of course, with the news of the State of the Union yesterday, that's the extra motivation that you need to see that everything's okay and everybody's going to be happy and we're going to pass all these laws together. And if you believe that, I still have 2 shares of the Brooklyn Bridge that I've been saving. But this is a very interesting one. It's been following nicely. My suggestion is if it starts following, keep following it. And if it doesn't follow, it's probably not working. That's basically That's the only one I have, Maria. I'm sorry. That's the only one that I have. I do not have anyone more than I could ask him, but I'll have to do it for tomorrow's show. I will ask him because he was on the show just last week, and he was on last Friday, as a matter of fact, on the 31st, and so I'm sure I still have it somewhere, but I will try to find it. Shucks, I don't want to look for it now because that wastes too much time, but I would like to figure out what's going on. But, it's been a pretty good forecast. Now, Mr. Winsky had been doing okay for us, but when he bet on the Rams, something's not right. We had to find somebody to replace Mr. Winsky. Anyway, you got to be wrong once in a while, otherwise you'll be right all the time, and nobody's right all the time. So let's keep in mind on some of this. This is a lot of stuff going on in the currency, folks. What you're looking at with the dollar index is really important, and some of the others is really, really good. Folks, if I only had guests on that never made a mistake, we would never have any guests. That much we know for sure. Yes, everybody loves Norm. Yeah. But we'll have Norm on again. I believe what we got to do is all we have to look at the thing because he likes to come on the time of the full moons and new moons. So we'll probably have him on the 18th. That's President's Day, so that'll be a holiday. And so we'll have him on in the oh, wow, it's a super moon. Actually, it's a super full moon on the 19th of February, so we want to keep an eye on that. It's a very, very interesting one to take a look at. Today was President Reagan's birthday, folks. I got to meet Mr. Reagan twice in my life, and he and Nancy, once at a dinner party and once at a fundraiser, and a very, very lovely couple, real class act. Good old cowboy. We met a Hall of Fame cowboy here in Tucson many years ago, and one of the first things that when Sarah was looking through his album was she saw the picture of Ronald Reagan as a cowboy, which in fact he was from Illinois, but he was really a cowboy at heart. And she recognized him immediately because he was a whole lot younger. Whenever I went to California to visit my daughter, we always drove through Santa Barbara, and at the top of the Santa Barbara Mountains was Rancho de Cielo, the ranch in the heavens, and that's where the Western White House was. So it was really a cool place. You couldn't get up there. It's been sold now to a private family, but really beautiful place. Didn't even have electricity, folks. He cut his own wood. He had kerosene lamps, and he had a little barbecue pit and a Bunsen burner. But he liked living it rugged. But that was the Western White House. Okay, let's move on to a few other things that we want to keep an eye on. We'll take a quick look here at this British pound because we already did that. Let's already do that. Got another one here I want to look at. Here's another one, folks. This is another one we're watching for Cy because he's been very bullish this wheat for the last 40 cents here. And you'll notice here that we're almost ready to break out to the upside in the Minneapolis March wheat. Now, this is 2 days old, so that March wheat, if you'll remember, we were showing you the spread. Now, March wheat is moving much faster than May wheat. And the reason why we're saying that is most probably orders are coming in to buy the wheat. Now, has that anything to do with the Chinese tariff thing? I have no idea. I really don't. And they don't either. It's just the fact that somebody wants nearby wheat because they have to fill orders. I mean, that's the only reason to do that. I mean, and you're talking millions of tons here, if it's 5-10 million tons. So it's going to be a huge order and somebody's buying it. So that's not weakness, Here you go. Somebody already posted it. Oh, thank you very much. Let's just double check and see where it is. I think, is that what you wanted? Yeah, I believe that's the one that you want, isn't it? Thank you very much for posting that, JB. Is that what you wanted, Maria? Thank you. I'm pretty sure that's it. That's the longer term one. Yeah. Now, someone's asking the question, why are they a little bit different? Well, one is a shorter term version. The other is a longer term version. When you make a big projection, long term, you've got to look at other data points. But when looking at shorter data points over 2 months, you only need a couple of spots to really think where you're going to turn. But if you're going to move out there into the future, it's difficult. That's why the future is so difficult to predict, folks. It's not an easy thing. Now, you have some days where you've got some really big things happening. Like we have a pretty good idea that on the 19th of February, we're going to have a pretty big move because we're looking at that super full moon. And that's always, pretty big. So we'll see what happens. Maria, please let us know that that's the one you want, because that's the one that I have somewhere, and I'm sure I kept it, but I think everybody can have it now. He's going to try it again here to put it up here, and we'll be able to see it. If not, JB, make sure that you get Maria's email, and you could email it to her so that she could do it. Because if I can't find it, what I will do is I will ask Tim later this morning, and he will get that information for us. So as we look at that, let's take a quick look, review what the markets are doing so far this morning. We had a little run up here to 27.37, backed off to 27.32. NASDAQ had a pretty big run. We went from 710 up to 70.40. It made a new high. The S&P hasn't done it yet, but it's still in the process. Who knows? The gold is trading. Where are we at in the gold? We're down at, where are you, gold? Shut the front door. And right here we are. We're 13.16 in the gold. It looks like we're heading down. I believe we're heading down to that 13.01. That would be down $30-some from the high. That's the harmonic number in gold. That would be the ideal place to be looking at it. So that's another one that I would be paying close attention to it. So those are some of the others. The crude oil, I believe we've made a major top in crude oil, folks, at that 38% level that we hit at 55.71. We're now trading $2.50 a barrel under that at 53.30. And the first profit price objective on the crude oil, I believe, comes in right around 52.50. I think that was one of the things that we were watching the other day. Yes, here it is right here. This is the one that we've been watching very, very closely here in the crude oil. We'll get this up so you can take a look at it. And there you go. There's your crude oil coming in around $1 a barrel lower, 52.65. You like to buy crude oil, that's the place to buy it. 877-927-6664.
The universe provides us with opportunities all the time, and I was no different. In 2006, I invested $2,500 in a 2-day Master Trader course taught by Tom O'Brien, then ranked as the #1 market timer for gold. The fact is, if you want to be the best, you must learn from the best. Hi, I'm Steve Rhodes, author of Mastering Probability and the Market Timer of the Year for 2018. To celebrate this accomplishment, TFNN.com is offering you a free 2-week subscription to my award-winning newsletter service, and there's no charge to you until day 15 unless you cancel sooner. That's right, we're waiving the normal upfront deposit, and this offer is available to anyone and everyone, even if you've tried Mastering Probability before. Sign up now, and I'll teach you the tool that identified the bottom in the Dow on January 26th, the morning that led to the largest daily point gain in history. This offer will expire on February 10th, so go to the homepage of TFNN.com now and click on Mastering Probability.
If you haven't checked out the newsletters page of TFNN.com, what are you waiting for? All of the TFNN newsletters are informative, up-to-date, affordable, and a must-have for every trader looking to gain a competitive informational edge in today's markets. TFNN newsletters cover every aspect of the markets to offer you the very latest in market news. Plus, new subscribers get to test drive our newsletters risk-free for 30 days. From all aspects of the markets, including stocks, bonds, metals, commodities, and tech, there's a newsletter to fit your needs exclusively from TFNN. Stay informed each day you trade and get that competitive edge that will help you stay ahead of the game. Visit our newsletters page by going to TFNN.com and click the newsletters button near the top of the page. TFNN.com, educating investors.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks. I posted a chart of Bitcoin in here. You see we've completed that Gartley on the 4-hour chart down there at that 3350 level, and as long as we stay above 3200, looks like it would be a positive one. We're about 100 points higher, but that's not too much. Regarding the IBM, we shorted that about 8-9 days ago. It hasn't gone anywhere, but it hasn't been going up either. So if you're in that IBM, I'd keep your stop just above that 136 level to see if it's going to hold that level or not. But that's what it looks like to me right now. Keep an eye on these Treasury bonds, folks. I still think they're getting ready to roll over, and we're going to see higher rates, not lower rates as they're trying to tell us. But that's neither here nor there. So we pay close attention to that if we possibly can. And what we're going to do is we're going to do our best to have Tom Hugard on at another date when we can connect with him a little bit better over there in Bournemouth, UK. So let's keep in mind that he's a really, really fun guy. I met him many years ago at a Bryce Gilmore seminar. Really a superb trader and a super nice fellow. And he's got a beautiful little 2.5-year-old daughter, just as cute as a button. So we'll have him on, hopefully in the future. We were supposed to have Stan Harley on today, but Stan was tied up. We're going to do our best to have him on tomorrow and see how that works out. And hopefully those people that are up in that Seattle area and Oregon can warm up a little bit, but they're not going to get any help from Tucson because we're going to be 28 degrees here tomorrow, and that is flat out cold. That'll be near a record. I believe our record low for that day in history was around 22 degrees. And of course, we're in the Catalina Mountains here, up about 2,500 feet. So if any slight precipitation, we'll have no snow on the mountains around us, and it'll look like Switzerland. It'll be about a day before the sun burns it off. So keep in mind, folks, we're at some critical levels in a lot of these different things. So pay attention, keep your stops working, and may God bless.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get them, folks.